Welcome everyone to the Financial Inclusion Week 2023, which is organized by Center for Financial Inclusion. Panelists from Mercy Corps and from Mercy Corps partner, Rays MFI. So let me start by introducing the panelists. We have Mahalet Saifu. She is the Director of Inclusive Economic Growth at Mercy Corps Ethiopia, and she is also a qualified program management global facilitator. We have Abdi Aziz Hassan, the CEO of Rays Microfinance. Before becoming a CEO, he was Deputy CEO of Rays Microfinance back in 2014. And then myself, I'm Tamrat. I'm Program Manager at Mercy Corps Ethiopia for Digital Financial Services. Before joining Mercy Corps, I have been working in commercial banks for over a decade. Before diving into the conversation, let me briefly explain about the context of Lowlands, Ethiopia. So there are over 14 million people living in the lowland part of Ethiopia. Most of them are pastoral communities who are engaged in producing livestock. And these communities are one of the most vulnerable community in Ethiopia, suffering from high rates of food insecurity and malnutrition, and also affected by regular rainfall patterns. So as you can see from the screen, the shaded parts are the lowlands of Ethiopia that Mercy Corps currently operating. On the financial inclusion status in Ethiopia is really low, with only 35% of adults having access to financial service accounts, which is really even below the neighboring countries. For example, in Kenya, it's around 82%, while in Uganda, it's 59%. The lowland of Ethiopia even is the status of financial inclusion is very low, even compared to the national average. So the lack of appropriate financial services in the lowland area is key to one of the key drivers of vulnerability and poverty in Ethiopia. What are the roles of Mercy Corps in advancing DFS in Ethiopia? So Mercy Corps has played a key role in transforming financial services, specifically in the Somali region of Ethiopia. So we started engaging, partnering with Somali MFI back then in 2011. We supported the regional government of Somali in setting up Somali Microfinance Institution, which is now transformed into Shabali Bank. So after 4 years, in 2015, Mercy Corps facilitated a partnership with HelloCash, which is a mobile money platform, technology platform provider. And this partnership has been very successful in terms of advancing digital finance in the region. Just to mention some figures, there are over 1.4 million active mobile money customers in Shabali Bank. If you see the daily transactions, digital transactions, there are over 161,000 transactions per day on average, with transaction volume of over 281 million Ethiopian birr, which is equivalent to 5.1 million USD. The other partnership we have in the Somali region is also with Rays MFI. Similarly, Mercy Corps supported the formation of Rays MFI, which is the first private microfinance institution in the region. And we introduced Sahai Pay, a mobile money platform. So Rays MFI also similarly is very successful in terms of advancing inclusive digital finance in the region. So they have around 1 million active mobile money users. And the number of transactions is also very huge, 200,000 digital transactions per day on average, with a transaction value of 300 million Ethiopian birr, which is 5.4 million USD. So overall, you can see that Mercy Corps has been really advancing digital financial services, particularly in the lowland parts of Ethiopia. Having said this, let me directly go to the discussion questions. Let me start first with Mahalet. So Mahalet, why Mercy Corps interested to start promoting inclusive digital financial services in Ethiopia back in 2011?
Okay. Thank you so much, Tamrat, for the brief explanation and taking us through what Mercy Corps has been doing. To address your question, back then when Mercy Corps decided to intervene and support the sector, the major reason was based on the findings of the assessment that Mercy Corps has done, and also based on the challenge that Mercy Corps as an organization faced and what the community in that region has been facing for a long time. So as we know, access to finance is an enabler for other businesses to flourish in every corner of a community or a country. So when Mercy Corps does the assessment to understand why not so many businesses are emerging, specifically in Somali region or in the eastern part of the country, where majority of the communities are Muslim, is because of lack of access to inclusive finance, especially communities who are residing out of the urban areas, mainly in remote pastoral, agro-pastoral locations. There was the predominant services were the conventional or the traditional access to finance, and not a tailored inclusive financial service and product which fulfills the requirements, so which is a sharia compliant financial product and service. So with this thinking, by not having an actor who is already providing such product and service, Mercy Corps again asked another level of question to say, so why there is no actor in the region who is able and ready to provide such services? So Mercy Corps was looking for partnership, both private and public. So mainly focusing on the private part, because by exploring partnership and by also having partnership with private sector, that whatever change we want to bring will be sustainable, impactful, and scalable. So in that region, there was already an emerging initiative whereby the regional government was getting ready to establish a microfinance institution. So Mercy Corps involved in this process and supported in providing technical assistance, so that the critical gap of not having an inclusive financial service has limited the emergence of micro, small, medium enterprises, as well as the starting of businesses, specifically focusing on pastoral producers and also women. So that was the major reason that Mercy Corps has designed its intervention to focus on inclusive access to finance. Thank you, Tamrat. Over to you.
Wonderful. Thank you, Mahalet. Abdiaziz, so can you just briefly tell us how Rays MFI was established and its business model, its target customers, and also highlights Mercy Corp support for Rays MFI.
Well, thank you very much. Thank you for having me, Tamrit, and thank you very much, Malet, for putting insight about actually some of the issues I wanted also to stress. Rays MFI is a private microfinance. It was founded on June 2014, primarily to provide access to finance for some of the community which we found are financially excluded somehow due to the accessibility, due to the religious constraints, due to cultural constraints, and the like. So the main objective for establishing Rays MFI, apart from being a pure private business entity, is socially also to address this gap. Rays MFI, strategically, Rays MFI aligns with technology-backed services. Most of our services are technology-backed. We use technology as a shortcut and as ease to reach access, to increase our access of finance to some of the hard-to-reach community, including pastoralists, agro-pastoralists, and areas that we cannot open branches or access to finance has not been reached due to the remoteness and the inefficiency of opening branches. So in general, Rays MFI is that, and we generally provide two categories of services, one being the regular microfinancing services, which is 100% sharia-compliant microfinance services. Even though Rays MFI is licensed to operate throughout the nation, we primarily focused on the eastern part of the country, especially Somali region, for a bold reason that the demand for our services was vividly seen in that area. So basically, as I was saying, our products are in two categories. One is the regular microfinancing, which includes microcredits, deposits, and the like. And also we provide a mobile money service called Saibe, which, as you have rightly mentioned, Tamrap is one of our most successful services in the region. Basically, Rays MFI, in summary, that's what we are and that's what we do in the eastern part of the region. Of course, we have been backed by MESCOPs throughout some of our interventions, where our objectives align, including especially the expansion of our service in areas where it's not commercially viable at the beginning. Thanks to the support of MESCOPs, one of the most innovative services which we have launched was supported by MESCOPs during the pilot, the e-Murabaha, which maybe I will explain more later. Also, during our early stages, MESCOPs have supported us in the expansion of branches, as well as procuring core banking systems, upgrading our mobile money services, and the like. So MESCOPs has been our strong ally in providing our services and in reaching the stage where we are now. Thank you.
Great. Thank you, Abdiaziz. So you have recently launched a new product, which is called e-Murabba Digital Lending, which is first of its kind in Ethiopia, and in terms of one, it's digital lending. Two, it's Sharia compliant. So tell us how it works, its use case, and also major KPIs.
Okay. It's very good question. We have recently launched new products, which we have been actually cooking, designing, and developing. The technology we are using in general, except the core banking, is in-house development. We have a team of engineers that develop all our technologies in-house. We have a development hub in Nairobi. The rest of the team are based in Addis and in Jijiga. This team develop all the ideas we have. So the idea of developing digital lending came up with our observations that access to finance, some of them we have already provided, which includes maybe the number which you have is stated in the introduction, Tamra, regarding the number of customers, the number of citizens in our country, Ethiopia, who have access to finance, which is 35. Maybe that's because of those customers who have accounts or saving accounts and the like. But I believe the number, access to finance has maybe, if we see it from the other aspect of providing loans or complete access to finance, it includes the customers to have access to to areas where they can deposit, access to facility where they can transfer money to their families and relatives, and as well as access to support for micro and small entrepreneurs or people who want to get such kind of services. So in our observations, we found that our service has reached in almost all the areas in our operational area in terms of enabling our customers to have access to somewhere they can deposit their money, enabling our customers to have access to be able to send money to their relatives or receive money from their relatives. But a very important element, which is access to credit, access to finance, was missing. And this was only limited to areas where we have branches. Not only us, all other financial institutions, they only give access to credit to areas where they have branches, even specific places, selective places, in a limited format. So this was actually causing a trend of that we were collecting the deposits from the very poor who needed support and then lending to people who live only the relatively more urbanized areas to the center. So we thought we should come up with a strategy whereby we lend to the people we are collecting the deposits from without opening branches and the like. So that's where the creation or the idea of digital lending came. Our digital lending is a platform where we intended to enable our customers, irrespective of their location, as far as they are in our geographical location, and they have a good profile with us, that they can get access to credit as well. In addition to access to deposit, in addition to access to the platform they can send the money to, but also they can now be able to get access to credit, even if we don't have branches to where they locate. So it came from in that aspect, and also it has been a very, very tough and challenging process to navigate all the Sharia principles within and make the product digital. As you may be familiar, most of our neighboring countries, especially Kenya, they are very much ahead of us when it comes to digital lending. But no one has yet implemented a sharia-compliant digital lending. So that has been a very tough process with us and with our Sharia board and all the engineers to maneuver those processes. So together with a partner digital lending, with a partner e-commerce platform called CommercePal, we together came up and maneuvered all the Sharia principles and enabled our customers to have state-of-the-art digital lending, Sharia-compliant, A to Z digitalized process, and enabled our customers to have access to digital lending, which we call it e-Murabaha. Also, we have recently launched another side product, which was initially called Hazzler, but now with the intervention of our Sharia board and the maneuvering of the Sharia principles, we have labeled it as e-Mudaraba. So e-Mudaraba is basically for customers who don't have a physical address. E-Murabaha is for customers who have a physical address. So both these services are now live and are working. Basically, even though the product is live and the numbers are increasing every minute and every hour, I'll just read from the last report I had. The total loans which we have dispersed so far is close to 5,300 and something number of loans with the e-Murabaha, which in terms of a volume, it's more than 70 million birr. It's 72 million birr that we have so far dispersed. The average loan size of the loans which we are giving is 13,000, slightly above 13,000. So in summary, that's the service which we are giving so far. Yeah.
Oh, great. Mahalit, so what are Mercy Corp's unique approach in terms of advancing digital financial inclusion in Ethiopia as well as globally? There are a lot of international development institutions. What's the unique approach that we are following?
Okay. I would say for Mercy Corp, the unique and the most important approach that we are using is the market system development approach, or the systems strengthening approach, whereby we do a deeper market assessment and analysis, which is based on secondary data and also primary assessment and analysis to actually understand the root causes of the underperformance of a specific sector. So in the case that we are discussing today, so in the sector of inclusive access to finance. So it would apply to other sectors like employment, enterprise development, agriculture, both under livestock and crop. But the approach, which is key to actually designing interventions and also identifying partnership, is a market system development approach, or the system strengthening approach. And the reason that we have chose to make that approach our primary approach is because for the underperformances or for the challenge that we come across with, we challenge ourselves to try to identify a sustainable, impactful, and scalable solution. So as I was mentioning in the first discussion point that Tamrat raised, as much as we know the problem, and in a short term, it can be addressed directly by Mercy Corp as an agency, but it will not be sustainable because as an agency, our role is a facilitator or a role of a catalyst, whereby we facilitate for change to happen, but we allow the permanent system actors to actually design the solution. So that's why we also chose to partner with actors like Rays Microfinance, whereby they have the incentive, the capacity, and the willingness and the skill sets to actually bring and to actually design and implement in a way that they get the incentive. At the same time, they also make sure the target groups, the clients, their customers are also served in an adequate manner, or in a manner that the market is dynamics, needs change, demands change, and market actors are better positioned to be able to respond to those changes. So that's why we promote working a lot with private sector actors prominently, and also public institutions, which are better positioned in the market to enable for those changes to happen in a more sustainable, scalable, and impactful manner. So that system strengthening and the market system approach is a primary approach. Blended into our MSD approach is also the resilience approach, whereby the interventions that we design also contribute to the resilience of households. So access to inclusive finance is one enabler, but also other economic opportunities are also blended into our activities, so that households build more resilience, so that in case if any shock or stress happens in the future, they have the capacity to be able to withstand and not slide back to the poverty level. So access to finance is one element, but if we integrate other sectors, then households' resilience is in a better position. As Tamrat was explaining during the introduction, the areas that we work are more prone to recurrent droughts and conflict, whereby households are facing a lot of challenge in terms of recurrent shocks and stresses. So if we do an integrated resilience building approach, then in partnership with the private sectors, they are in a better position to be able to build resilience.
Excellent. So Mercy Corp's unique approach is, just to summarize it, we use market system development approach. So we try to solve the root cause of the whole market system instead of providing direct delivery to unlock the system. Ultimately, to build strong and vibrant private sector. So now let me come back to Abdulaziz. So your new product, which is Imuraba digital lending, which has been in the market only 1 and few months, but within this period, you really try to expand the service and reach some reasonable figures, which is very good. So what are the challenges that Rays MFI faced during the pilot as well as the scale-up phase of digital lending, and also the key lessons?
Good. Thank you very much. As you have rightly mentioned it, our product is an event product. It is early stage of implementation. We can say we are still in the learning stage where we every day improve the service and the deliverable, the channels we deliver on our service. Some of our major challenges included actually, as you may be aware of, there is no proper addressing in the country in general, as well as in the areas where we operate. So when it happens when a customer requests a loan of, for example, for example, a customer wanted some of the an improved seed from Addis Ababa. So if he's eligible for the loan and then we finance the loan, the delivery company wants to have a proper address where they can deliver the item. So it happens we know our customer by phone number, he's by his account, he's our customers. But one of the challenges we have in general in the country is we don't have a proper addressing where we know who lives where. So this was one of the problems. Fortunately, our partner Hudud Express and together with us, who owns the marketplace, we have maneuvered with this problem by setting up digital kiosks in some areas, and then these kiosks were acting as a point of address where a customer can say, I need my items to be delivered at kiosk X. Then he comes and picks up from there, the closest kiosk he can choose there, and then we use it to deliver there. Also, we were using our agents as a point of address that our customers, we have recruited some of our top agents to also be agents of the IMRAP or agents of the digital lending. So they were also a point of address. Addressing was one of the challenges we had. The other challenge we had is Rays in general is a private microfinance. We are not dependent on government or maybe other source of finances, except the supports we get from development partners who we have a common objective like MESCOPs. So our lending comes from the deposits we collect from our customers, which of course is sometimes limited when it comes to the demand for lending, both for the conventional loans, which we have been giving through our formal channels, the regular financings, as well as the digital lending. So when we have opened a channel which gives us which gives our customers an unlimited requests, or that they can gives us access to unlimited coverage, the pressure for the demand has become way more than the preparedness which we had in terms of the loanable fund we were ready to finance. So this is also the second challenge which we had. Apart from that, the area which we operate, especially in rural areas, financial literacy is relatively very low. So it takes us an effort to convince or to even advise some of our customers to understand the process, because most of the process are digital. For example, our customers, whenever they start requesting loan, they go through a digital channel and they finish everything digital. So sometimes it happens we are obliged to call back the customer and advise him some of the procedures, which we know he signed it digitally, but we also try to make sure if he understood some of the terms, because the contracts and everything is also digital. So financial literacy, low financial literacy was also the other challenge which we had. In general, those were the major challenges at the early stage. Also, when it comes to our credit score, we have a credit scoring engine in-house built. Our data is only combined with our own data, so we only calculate the credit worthiness of the customer based on his profile with us. So new customers need to stay with us for a while so that we know them better before they become eligible for kind of loan. This is maybe due to the fact that in general we don't have a national ID. Everyone is new to you. Someone may have 2-3 accounts. So to avoid that, that's also one of the other challenges which we have in terms of identifying the credit worthiness of the customer. But all those we try to maneuver, and we are living with all those challenges, and we are trying to solve them as much as possible.
Great, thank you, Abdulaziz. So you mentioned that there are 4 main challenges in expanding digital micro-lending in your institution. One is the lack of physical address. 2, lack of loanable fund. The demand for loan is high in Ethiopia, but most of the financial institutions face lack of loanable fund. 3 is financial and digital literacy, which is also very challenging. The 4 and last one you mentioned is lack of reliable data that you can rely for credit scoring, because the nature of these data-driven loans require data history of clients, which is missing in the Ethiopian context because of the lack of digital ID. So these are the challenges. So let me go to the final questions to Mahalet. So Mercy Corps has been engaging in promoting inclusive digital financial service in Ethiopia in partnership with institutions like Rays MFI. So can you explain some future interventions on inclusive digital finance?
Yeah, thank you, Tamrat, again for the chance. So as the market is dynamic, Mercy Corps continuously engaged in conducting assessments and research on specifically on the inclusive access to finance, and also through the different partnerships we have with the institutions. And based on some of the assessments and the research that we have done, we have realized that there are definitely gaps that we need to look into, and some of these are the MSME, micro, small, medium enterprise financing, for one of the reasons that Abdulaziz also mentioned, that lack of liquidity or loanable fund is one of the biggest challenge, whereby the emergence of new enterprises is going at a lower pace. So if we are able to catalyze such tailored financing options, which are mainly digitized because of locations, and also accessibility, scalability, affordability, and also uncollateralized. So that's also one of the big challenges why the industry is not growing at the rate that's expected to grow, whereby for an enterprise or for a business, an individual to get a loan, the demand for collateral is very huge. So how can we serve the market with uncollateralized digital loans, specifically focusing on women, youth, and also as a country, Ethiopia also hosts a lot of refugees. And due to the current situation with the conflict, there are a lot of people who are displaced. So in addition to the existing businesses in the community, there are also potential business opportunities among the refugees, among people who are internally displaced. So building on the credit history, so using that digital financial services and also additional innovative financing solutions for these segments of the community is also very important. The other focus that Mercy Corps is also paying attention is making sure the capacity of institutions like Rays MFI and other emerging potential partners is properly built, which is shaped by emerging new technologies, knowledge, skills, and also the capacity of the board. The institutional boards are also capacitated with the new technology, with the sharia compliance. So we also focus on building institutional capacity through different partnerships and platforms, and making sure that the decisions are led by data-driven information. So these are the major focus areas. And to mention the last but the most important one is also the inclusion of women into the access to finance bit, whereby on the data that Tamrat was presenting at the beginning, currently only 20% of the women are actually getting access to all these financial services. And the way the products, the services are tailored, do not necessarily take into consideration the situation of women, where they have a lot of household responsibility and some of the digital literacy constraints that Abdiaziz was mentioning earlier. So supporting also these institutions with gender strategies that will help them develop tailored products and services for the women. So these are the priorities that Mercy Corps is working towards too.
Thank you. Just to build on what you have just mentioned, so we have two major priority areas in the coming time period with regards to promoting inclusive finance. One is on MSME financing, especially small businesses. They are in Ethiopia. They are struggling with, to get loans from financial service providers. So this is a huge gap that we, as an agency, will be prioritizing in the coming period. The other is, as you mentioned, on women financial inclusion. If you see the figures, out of the 2.4 million active mobile money users, women only represent 20%, which is very, very low compared to men. So we can say that women are lagging behind. So we want to focus on increasing women participation in the financial inclusion in the coming period. So a similar question for Abdiaziz, the last one. So Rays MFI has been very successful within short period of time since its establishment. You have done a remarkable job in expanding digital finance, especially mobile money. So you have over 1 million active mobile money users. You have also a good network of merchants, agents across the region in Somali. You have also introduced, the digital lending, which is now growing. So apart from this, what are the main priorities for the near future in advancing digital finance for low income people, particularly for women?
Well, Tamrat, that's also a very good question. In general, we when it comes to the lending, when it comes to maybe the deposits and the number of regular accounts we have, mean are the majority on that sector. But when it comes to lending, especially as the lending goes smaller and smaller, micro lending, small lendings, women are, the majority of those loans goes to women or female, luckily. I don't know the main reason, but statistically, that's what we see. And the more we focus on the digital lending, which also is primarily smaller than the regular loans which we are giving, the trend shows that, except the root cause of our primary customers being a male, but when you see as the loan goes smaller and smaller, it's women beneficiaries that are usually queuing and demanding for that. That's one reason, one of the good signs we see women inclusion coming on board by using this technology. In general, as Rays MFI, our strategy is to focus on innovating through or around technologies. So now we are also launching a new product which we call Hagbad. Hagbad is a kind of table banking where a group of people come together and they collect kind of the system. They subscribe the system at one time, so everyone commits some loan. I don't know, in America it's also called a coup, that kind of a service. So that service encourages female depositors as well as lending within the female, because we collect from the group and then we lend one from the group. So it's a kind of a table banking. That service is also a new service which we are now finalizing the design and the building the service, which will very soon launch. Also, the other service which was part of the digital lending, which was the e-Mudaraba, was kind of giving, it has a very good element of creating job for the new graduates. The difference between the e-Murabaha and the e-Mudaraba, maybe the e-Mudaraba, as you may be aware of, our previous name for this product was the Hustlers product, where we use it to enable customers to be able to request loans. Then we finance the items, but we don't allow the items to be taken with them because we don't have any collateral from them. We place a warehouse owned by Hudud Express, and then they can retail within the digital platform and make their own profit. So this product is very interesting for the new graduates, for people who have a good passion for getting job within the digital arena. Fortunately, people from the East have a good passion in working or doing digital related jobs. So we found that as a service whereby people from the East or from that area can bring their talent to the center, and then they can do jobs in the center of the nation while they still are in their homes. So that's also one of the other services we are trying to implement. In addition to that, we are also trying to put some emphasis on agricultural, pastoralist-related services and products, as that's also one of our major priority areas. So in general, that's also what we are planning to do. Thank you.
Thank you very much, our panelists, for sharing your experience, insights, and perspective on inclusive finance. We also would like to appreciate our audience for taking time to listen to the panel discussion. We look forward to receiving your feedbacks, opinions, or any questions using the email address displayed on the screen.